Kevin Prendergast, partner at the Retirement Network, Leland Smith. I'm recording this video on Sunday, April 6th, 2025. Going to get into the latest minimum present value segment rates and what they mean for your pension lump sum as an AT&T employee or retiree, if you're retired already and just deciding what to do with your pension. This video is coming out a little bit later than usual due to some personal time off. Our kids had spring break. However, the timing is great in that we had significant stock market volatility last week, so I'll be able to incorporate that volatility into today's comments, what it can mean for interest rates and by extension your pension lump sum, if that's the route you're leaning, and also what to do with your 401k retirement savings plan. Stock prices have been going up pretty consistently from October of 2022 until this year. So this volatility is recent. We had a couple of years of really good, exceptional stock market performance, significant stock price decline last week. So we'll talk about what, if anything, to do about it. All right. And if, after watching this video, you have any questions, visit theretirementnetwork.com. You can join our mailing list. That's probably how you're getting this video, or you can click the Get Your Free Assessment button in the top right-hand corner. All right, perhaps due to maybe some cutbacks at the IRS, this website doesn't seem to be getting updated anymore, so we'll go to a different website. But this is the website you're used to seeing, and I'm putting this on the screen so we can see the November rates, right? 4.66, 5.25, 5.57. Those November rates tend to be the rates upon which a pension lump sum is calculated in 2025. So if a pension lump sum is commenced in 2025, it is typically going to be the November rates. There are some exceptions, like if you turned 65 a while back, that's one noteworthy exception. All right, so 4.66, 5.25, 5.57. We go to this notice here. We can see the February rates are pretty much in line, right? They're elevated still, elevated relative to what we were looking at in 2020, 2021 certainly. And we'll have to pay close attention to what's going on in the real economy and by extension, the stock market. The stock market is and the economy are not necessarily the same thing. They do seem to have a relationship, but they're not the same thing. We'll have to see what happens, because what happens when stock prices decline is investors tend to flee for safety. They tend to flee to bonds, which drives interest rates down across the board. Now, the first segment is largely influenced by what the Federal Reserve is doing. That's not so much a market-driven rate. The second and third segments, however, those are more market-driven. So we've seen interest rates come down quite a bit recently. So point being, when we see the March rates, the April rates, I'd expect the second and third segment to be materially lower than you see here, okay? And the way that might influence you as someone with a pension lump sum is if you are already retired or you're going to retire this year, maybe you end up waiting until 2026 to commence your pension lump sum if we think these rates are going to be meaningfully lower by November of 2025, okay? As to your 401k, certainly not the time to, if you held stocks coming into last week, certainly not the time to sell them. Stock prices are probably nearing 20% undervalued by our estimation, by the estimation of a service we subscribe to called Morningstar. So stock prices are probably too low. So we don't really want to sell stocks at this level. Instead, with our ongoing contributions, so the contributions, the money pulled out of our paychecks every pay period, if we have it in our budget to increase our contributions, good idea to do that. If we don't have it in our budget to increase our contributions, then the contribution level we're making, hopefully it's at least 6% to capture the full match. Let's allocate those contributions entirely to stocks if you have the risk tolerance for it, if you have the time horizon for it, because stock prices are probably too low at these levels. So it's a good opportunity to buy into stocks when the prices are too low. And if you have a multi-year time horizon, not just to retirement, but really to life expectancy, right? We're saving for a long, long time when we're saving for retirement. A good idea to maybe orient those ongoing contributions, your future contributions, towards stocks while prices are too low. Hopefully this helps. See you next month. Bye.